Most people think that successful investing is all about picking the right stocks. After experiencing 3 crashes in the market in year 2020, 22 and the recent 2025, I realized successful investing is more than that. I'll share with you 3 lessons I've learned from each of these crashes and how these lessons totally changed the way I approach investing. So before we dive in, just a short introduction. My name is Vincent and I'm based in Singapore. I used to chase all the normal success markers of having a higher income, titles and achievements. But over time, I realized that all I wanted is to have more freedom and control over my money, time and life. Now I am on this journey to design my life and build financial freedom in a way that actually feels right to me. I don't have everything figured out, and this is the reason why this channel exists, to document my learnings and sharing everything I learned with you along the way. So let's dive right back to today's topic. Let's start with the first lesson. The first lesson was in 2020 when COVID happened. So in 2020, when COVID happened, market came crashing down. Things were uncertain because there are a lot of uncertainties in the market due to the fact that we know that market is not opening up, people can't get to work, supply chain are disrupted. And during that period of time, the lockdown was worse than SARS. As I remember previously when SARS happened, we were still happily going to school and seems like things were still business as usual. But COVID really dragged for years, and it was the first time I faced that I have to be locked down at home, we can't go out and everything have to be worked digitally. But during this uncertain time, something clicked for me because I saw that the market crashed during this period of time, and that was the period when I started to think a bit deeper of whether I should utilize my cash for my investments, because it seems like it is a once in a decade opportunity for me to pick up assets on the cheap. So I took action and I started buying, and the good news is market recovered so fast because of the quantitative easing that the Fed did. That was a period that I hit my first $1 million in my investment portfolio. So utilizing my funds for investment during that period of time happened to be a very good strategy for me. So what was the lesson learned in year 2020? Doing something is a decision. Not doing anything is also a decision. And sometimes not doing anything can also be the riskiest move of all. Because looking back at hindsight, if I were to just sit still and continue to dabble in my investments, not really utilizing my cash to build up my assets, that $1 million will never happen. So going to the second lesson was year 2022. During 2021, I was accumulating a lot of Tesla shares. I was reading up on EVs and battery technology, and I think it was the Paris Climate Change Agreement talking about environmental challenges, going green, and the Biden administration during that period of time also favored green energy. And what is the best company during that period of time in US doing electric vehicles? That is only Tesla. So I invested heavily into Tesla, picking up the shares with whatever cash I could find, and I built up a sizable portfolio in Tesla. So for a while, everything looks right because the portfolio continued to grow at a rapid pace. Returns were strong, and the investment portfolio growth can even replace an annual income. But things changed when the inflation hit 9% and Fed came out and proposed quantitative tapering. So rather than keeping interest low, they were quickly hiking interest rate up. So I remember that was the year when interest rate went from 0.25% to 5.25%, and it has been decades since we last saw interest rate went up at this pace. So when Fed was doing the tightening, it wasn't favorable for businesses or the economy, because when interest rate went up, businesses have to borrow on a higher cost. And imagine if you were to buy a property at that point of time, you would have also experienced higher mortgages due to the higher interest rate environment. So when US Fed increased interest rate, it has an effect of bringing prices of the assets down. And that was the period that Tesla stocks was so volatile, and it also came back down. But when it was moving 10 to 20% per week, that kind of volatility when it holds a majority position in your portfolio can cause you to lose sleep, because at that point of time, I definitely lost some sleep when the volatility was so great. So year 2022 taught me a lesson, and I will never forget about it. And the lesson is not to be so concentrated in a single company, because even if you believe and read up and do all your due diligence about one single company, things still can go wrong, because it can be 99% you're right, but what if the 1% you are wrong? Is it worth it to take that risk and lose your sleep over it? And the answer for myself is no. So after the realization, I start to diversify my portfolio. This is because I wanted some breathing space and to ensure that the volatility does not cause me to lose sleep over it. And I wanted to say this, even if I'm wrong, it is still okay. Hence, I started to taper position and build up my positions in other companies. So right now, instead of going all in on companies, going huge on it and taking the big swing, what I'm doing right now is finding companies that I really like and start investing in them. However, for each counter, it will never exceed 5 to 10% of my portfolio, so that I know that even if I'm wrong, that wouldn't be detrimental to my portfolio, because the stock can be only holding 5 to 10% in my overall portfolio, which is still something that I can tolerate if anything were to go wrong. So the lesson here in 2022 is to diversify your holdings rather than going all in and make very huge concentrated bets. So going next to the lesson I learned in year 2025, and this is the lesson I didn't expect to learn. You usually don't learn many lessons when things are working very well, but you always learn when things go against you, which I'm still grateful for all these lessons. So in year 2025, what happened? So I have been trading options since year 2021, and over this period of time, I gotten very bullish with my positions, because you would have known that year 2023 and 24 market was doing really well. And also due to the fact that market is doing very well, I started to stack up a lot of bullish positions in my options trade. But when you started to become so bullish on the trades, I think there are some blind spots to it, which happened to me, which was I did not manage my stop loss positions. So after the Liberation Day that Donald Trump did, market came crashing and my bullish options positions took a huge hit during this period of time, and that is easily a 6-figure loss to the portfolio. So what went wrong here? The strategy isn't a problem, because I have been making earnings through my options trade over the years. But the issue over here is, I think number one, the stop loss. Second thing itself is position sizing. For example, if I were to do some trades using options, right now all my options trade will not exceed 20 to 30% of my portfolio. And every trade should come with a stop loss to manage the risk, so that you know that even if your trades go against you, that will be something that you can tolerate. So example, if you were to set 2% of your portfolio for your option trade, so even max loss itself will be 2% of your overall portfolio, which isn't detrimental. So let's say if you have allocated 20 to 30% of your asset portfolio for your options trade, you know that the worst case scenario, if every trade went wrong, it will be 20% or 30% of your portfolio. This is to manage the risk. So what is the lesson over here? The lesson here is to understand position sizing. When the market is good, it can be 20% of the portfolio being allocated to bullish trade. But when market conditions are changing, we have to be nimble and change some allocation, which might be 10% bullish trade, 10% bearish trade. And in this scenario, this will help you to manage the risk on your portfolio greatly. So right now, I play my stop losses and position sizing tightly. So it gave me peace of mind knowing that if things went wrong, I will still be able to sleep peacefully at night. And I will not take such a huge loss, which can be an amount that I have built over the period of time. And by the way, if you are also someone who is working towards financial independence, I also share my insights in my newsletter, Come Pursuit, which is a weekly newsletter. If this is something that you are keen, you can sign up in the link below in the description box. So coming to the final takeaway, let's do a quick run through on the 3 lessons. Year 2020 taught me not taking any action can also be a risk itself. Year 2022 taught me the importance of diversification. And year 2025 taught me on position sizing, which is essential to protect the capital. And it is not just about making gains, but also protecting what you have built. So if you have enjoyed this video, click on the like and subscribe button so that more videos like this can be shared to you. I will look forward to talking to you in the next video.